Right out of the gate this morning, fear is absolutely gripping the market at 25 out of 100. Can the Magnificent Seven tech stocks save this sell-off before we slide further south? The opening bell brought mixed signals across the board today. The S&P 500 dropped 23.92 points, or 0.32%, while the Nasdaq took a much harder hit, down 243.41 points, falling 0.93%. That's a meaningful tech sector retreat right there. The Dow held relatively steady, with only a 14.65-point decline, showing defensive positioning in blue chips. The Russell 2000 barely budged, up just 0.35 points on the day, suggesting small caps are playing it safe. Here's what's driving the rotation this morning. United Health jumped out immediately as the single biggest mover, exploding up 8.06%, or $33.71 on strong earnings momentum. Home Depot followed suit with a 2.08% gain, and Costco rallied 1.97%. These defensive consumer and healthcare plays are where smart money is rotating right now as tech wobbles. But the damage on the tech and finance side tells the real story today. Goldman Sachs got absolutely hammered, plunging 4.31%, down $49.66 in the first half hour. AMD dropped 3.4%, losing $18 as the AI enthusiasm continues cooling off. Intel fell 2.93%, signaling serious semiconductor sector weakness across the board. These losses matter because they're showing investors are walking away from yesterday's AI darlings. The Mag 7 are sending conflicting messages this morning, though. Apple managed a small 1.13% pop, while Nvidia sold off 2.24% and Tesla lost 0.69%. Meta is down 1.59% and Microsoft slightly negative at 0.52%. Analyst consensus remains overwhelmingly bullish, with 63 buy ratings on Microsoft and 64 on Nvidia alone, but the market clearly isn't listening right now. The story this morning is straightforward. Healthcare and defensive consumer names are catching bids, while semiconductor and financial stocks are taking fire. That's a classic de-risking pattern when fear sets in. The Nasdaq underperformance versus the Dow tells you everything about sector rotation happening right now. Watch the 10-year yield closely over the next few hours, as that could trigger either a relief rally in growth stocks